had a good sleep and you had a a good rest, and you're feeling up for the trading today, it's going to be a bit of a strange one because currently we've got a big risk on event in the news, and so are things out there that exist that are called news algos. Now BlackRock own the majority of these algorithms, and what happens at the New York Open, they'll do a scan and a sweep of news events with positive or negative keywords, and then they'll place orders based on the keyword against its context. Like there's a subtext here, so it will know that its progress is positive, and then it will scan against the Ukraine, which was a huge risk event, and so then that's therefore be risk on according to their algorithm. Right, so when we go live in New York, we should be like rocket mode, because these banks are going to buy a lot according to their the logic of their algos. So that's going to be interesting. So this is going to be a risk on story today. Like I said last week, there was like a geopolitical chess game where Putin had made his move, Biden then responded, and we didn't really want any reply. We didn't want anything back from Putin, ideally. And then what's happened is Macron stepped in, and it looks like they're actually having like a truce, and they've made progress. So that's going to be risk on, but there is something you need to bear in mind, is that the retail guys at FXCM, they're buying, they're long S&P, so it might just be a payday for them. After all, typically speaking, they get absolutely destroyed on a daily basis, so today could just be an exception where it just comes up due to the fundamental factors, right? And then these guys get paid. It would be unusual for them to get paid, but it can happen. What would be more likely is that we come down to wipe them out. We have to test those lows and break that support, and then they get flushed out, and then they go, oh, why did I buy? I knew it was going to fall. And then they all collectively reverse their sentiment, and then they go bearish. And that's what we want. We want them to go collectively bearish in order for price to come up to destroy them. We don't want them to be bullish, not on the S&P, but they're currently long on the S&P, so it could just be a payday for them, which happens, but it does mean our risk calc is going to be a little bit wonky. Right, okay, so just bear that in mind. They might just be might be getting some profits. It's a rare event for them. So looks like the EURUSD has fallen a slight tad there, so that's interesting. And don't forget your SSI snapshots as well. So there's the S&P going into sell territory, whereas the UK 100 is definitely a buy. Germany is a sell as well. France is a buy. US 30 is a buy. So yeah, it could be a bit of a choppy one. On the economic calendar today, we haven't got that much. We've got some high severity data, retail sales from Italy, and then we've got a trade balance data from the US, but really all eyes on the US inflation on Thursday. Alright, so I told you about that. To quickly talk about the bubbles, we've got an Aussie yen set up. You can see like the logic there, you pitch strong versus weak. Alternatively, you could do Aussie pound or Aussie euro, but really the clear one would be the yen, because we're in that quadrant and we're in that quadrant. Note that CAD's in a strong buy and gold's a strong buy. CAD bubble is being naughty, that should be larger, so CAD should perform better. At the moment it's getting crushed a little bit. The performance should be better because the retail guys are shorting it, and that'll tell us that they're getting paid. So that bubble should be larger, because then they won't get paid and they'll get destroyed on their CAD pairs. So look for reversals on CAD, look for potential Aussie yen set up. Let's go here. Market watch, market heat maps. I'd say it's more risk on than risk off. We've got more greens than we've got reds. Hasn't calculated that data yet, but I just switched on my computer, so that could be the reason for that. But there's certainly more green than red anyway. And then really the one that we need to be watching is US 500. I mean, that should probably fall in order to flush out the retail guys. Alright. Aussie yen. So theoretically you could use the Omni trend on the quant tower. and that's like a dynamic stop loss. So you could have your stop at 82.13. We're at 82.25, so we're looking quite bullish. We've got that support. We've broken the resistance omnitrend. The volume node of this session is higher than this one, and this volume node of this session is higher than this one. So this would be a bullish scenario. This is a bullish scenario, and we know that this is a buy according to the bubbles. Okay, that's that. I guess I probably want to wrap up the video now because it's getting quite long. You want to keep an eye on your monthly pivots. Don't forget 135.17. This is GU, ascending channel. One above is 13553. 135, yep. One below is 134.85. We are just teetering on to being a buy. We're 50-50, but we are at a static level a buy because we're below 50%. And this coming up would agree with the risk on nature that we're going to be undergoing. I think when America wakes up, they'll see this, and then we'll be risk on because the banks are going to place in large orders at the open. Because this is it's a risk on event, and it's good that there's a resolution. To be honest with you, no one wanted anything like this. Really, it's not good at all. So yeah, this coming up would be a risk on thing, which would make sense fundamentally. Sentimentally, we're okay. Technically, we're okay because we've got monthly pivot support, right? Maybe, yeah, do dollar yen because we've got weakness in the yen, so we might still look at yen pairs. It might make sense actually. One above for UJ, 115.60. You can see the stops there. So the one below is 114.85. We've got monthly pivot support. We are a buy, fairly sideways. So that's what I would target personally. It's only 11 pips away, but you'd have visibility of the stop loss clusters before you entered the trade anyway, so you knew where to target. Currently we're a buy. Yen is getting crushed. So that's that. Oh yeah, we're going to look at some yen pairs. I'll just do euro and then do pound, and then we can wrap up, and then I'll do another video tomorrow. Let me know what you want me to do, if you want me to look at any pairs or anything like that. So that's a large stop loss cluster, 132.35. It's a long way away, so it's possible. It's definitely a buy, and they sold it in a big way. God, that's crazy. But yeah, they sold it. You had the 50% cross, and then they sold it at the 50% cross. So there, roundabout during this candle here. Oh wow, they got absolutely burnt. Wow. So I think up there, then that should destroy them, and then that'll be typical of the retail guys to hold on to their losses until the point of extreme. So I think that's going to be likely. 131.25 pound yen. Don't forget the yen bubble location as well. Yeah, strong channel there. H4 channel. Pound yen. Looked like it was quite bearish, and then we definitely bounced off monthly pivot. 155.16. One above is 156.60. One below is 154.99. We are a buy, and they sold it. So that agrees with the static. So I think the bubbles are going to work well today, I think, by the looks of it, but maybe see a reversal on CAD potentially, and so look for strength in Aussie and weakness in the yen, and maybe even the pound. Note that the USD could potentially be in the strong sell section here. If it goes to the 50% line, then we'll be in a strong sell. So trade carefully, and remember, all eyes on Thursday. I might try and wrap up all my trades before that. We've got the EURUSD sell, so hopefully that's going to work out. I might even move my stop ahead of entry, so I'm out, at a profit. But ideally, I'd want it to continue lower, and that's that. So we're using the average bubbles now. I think it just makes sense to do that. But if you want to use the daily and the weekly, then you can. But the average might be better. Alright, well, have a good day, and I'll speak to you later.